Investors and traders, welcome to the channel. Today we'll be taking a look at the key US stocks that we have been following for quite some time. This video is for educational purposes only and is not a financial advice. So we are taking a look at the stock of Apple. It's a daily chart. What we can see is that Apple actually broke out of this trading range a few days ago, and it had actually met our target of $150 per share level quite a long time ago. And it appears that now um, the stock is a little bit in consolidation, but the possibility of reaching this 78.6% Fibonacci retracement around $166 per share level, it might be feasible. We had also done a um study for the stock on a longer term basis. I will put a link for that video towards the end of this video, and in that we do have a higher um, target for Apple as well. So it's possible Apple could actually go and target these highs right back from 17th of August. Let's take a look at Microsoft. Microsoft reached our target of $277 per share level quite a while ago, and then it went into a bit of a correction. And if you see this channel line here, at one time it was a repellent zone, but it began to act like a propellant zone, and the stock actually has quite strongly moved higher. Here it's a little bit in a consolidation. Perhaps there's a possibility that it could go up to $290 per share level, challenging those highs back from August of 2022. Let's take a look at Amazon. So this Amazon stock seems to be the weakest of the India stocks that we are taking a look at. Um, I don't know from a fundamental perspective why that might be the case. Amazon did announce a further layoff of about 9,000 employees, and maybe it's because also the stock is classified under consumer discretionary, and because of the cost of living and interest rates going up, there's a possibility that there's not that many customers who are making a lot more purchases. I don't know the fundamentals of it. It could also be AWS related, but the organization is right sizing. So this one has been in a consolidation for quite some time, and we've drawn this brown line here. And above this line, we believe this stock is actually has a potential to perhaps move in this ABCD even up to $120 per share level, um, as long as it remains above this level. But what it appears to have done is just finding resistance from the 50% retracement from this level here, right, from 2nd of February. So this one we just need to be watching, um, and there's a possibility as long as it doesn't break below, it could be moving a bit higher. Also, let's take a look at Tesla. So again, for number of weeks, it's been a month now. $210 per share level is the key level, and here the stock has just gone into a trading range and into consolidation. So we are just watching this. If it begins to break out of it on consecutive daily basis, that could then perhaps have leg higher, maybe something like this, assuming that this is the A, B, and this is the C point. The D point could actually take it to $280 per share level, but we don't know yet because this level hasn't been broken, $210. And the possibility still remains that perhaps it could actually make an A, B, C, D down like this. So in this, assuming this is point A, point B, and this is point C, right to the 61.8% retracement. So let me actually try to highlight it like this. Okay, so I'm going to put a question mark here, and also let's change the colors. um, Oops, so what I wanted to do actually. Okay, but I believe you get the point. Um, Here we go. Um, so this is what we are watching in Tesla. It might be doing this pattern. It will fill this gap here. 61.8% Fibonacci retracement. We have the ABCD here, and that's going to be a pretty strong level to watch for support here, right at the $146 per share level. So I'm just going to write 145 here. There we go. Then the Meta. So actually, Meta has performed pretty well. It reached the $200 per share level, the 38.2% Fibonacci retracement. It's for a few days over above it. That's a good sign. And perhaps the stock is consolidating here. There is possibility that after such a extremely long run, maybe there is going to be some consolidation back into the range. But the stock begins to look in a better shape now. Okay, then we finally look at Roblox. So Roblox, we believe that Roblox is actually moving in an ABCD structure higher. However, there are a number of resistance level on its way in the CD leg, and we had mentioned this zone here. That's where it has found resistance previously on one, two, three, maybe the fourth. It needs to quite a lot of energy to break out of it, and then finally take the highs out at 52.85 to reach to 57, maybe even $60 per share level. We just need to keep on watching. Of course, the broader indices if are going to have a big impact on these stocks. If the broader indices like S&P 500 begins to see pressure, the pressure will also come in these stocks. But for now, what appears is that this stock is consolidating right here. There is a little bit of resistance overhead, um, and moving above here would be nice because that would mean that it's in fact is moving in that ABC structure higher, and we could be looking at about $58 per share level as the deep point if indeed it gets there. So thank you very much, guys, for watching the video. This is what we're looking at in these stocks this week. If you find our analysis and how we look at the markets using Fibonacci retracements and pattern recognition, then please do subscribe to the channel. And if you found this video of good educational value, please do like the video. It just encourages me to produce more videos for educational purposes because it's an indication that people actually like watching these videos and find it for good for their educational perspective. So thank you very much. Good luck and good trading.